Hey learners, let's talk about SBR. My name is Liliya Kirylenka. I'm a tutor and I have an SBR course, and I would really love for you to know how IAS 16 can be tested. With SBR, we care not only about the basic principles of the standard, we care about the possible manipulation. And we know that for the expenses, companies may try to understate those. So when we look at IAS 16, when we look at property, plant and equipment, we see that this is the standard that requires us to charge depreciation. So what can be manipulated? Let's think about a company changing its accounting policy for depreciation. So, for example, a company had an asset and now it's going to depreciate the asset not based on the useful lives, but rather production units method. How are we going to tackle this scenario? First of all, if the company decides to apply a certain policy, then you are going to clearly state whether this is accepted or not accepted by the standard. IAS 16 allows to use production units method. It would be important because some of the methods would not be allowed, like we can't depreciate items based on revenue, because revenue includes price, and price has nothing to do with the wear and tear of equipment. But units of production, they do. So we would need to clearly state that this is acceptable. But then, when we have a certain change in accounting, we need to open IAS 8 that talks about accounting estimates, accounting policies and errors. And we need to clearly state whether this is a change in accounting policy or accounting estimate, and as such whether the adjustment needs to be done retrospectively or prospectively. In this case, despite the fact that in common life we may use changes in accounting policy, from IAS 8 perspective, these would be the change in accounting estimate. And you need to clearly explain why, because that comes from the change in expectation of how economic benefits are going to be received. So if this is the change in accounting estimate, then we are going to do that from now on, so prospectively. And that will be stated. It would be fantastic if you could also say that the change in accounting estimates can be allowed only if it's going to improve the relevance and faithful representation of the financial statements. Okay, and then if we look at the figures, we may find out that the depreciation charge would decrease. And if that is the case, we would need to use this as a trigger for IAS 36 impairment. We would need to say, oh, look, the asset brings less benefits compared to whatever was expected. This means that there is a sign of impairment. And we would talk about that. So IAS 36 as well. And that is how IAS 16 can be tested. So not just charging depreciation, but talking about it. And you will find out that you don't really use any debits or credits, right? You don't use numbers. You just talk. Let's talk about another example. We have IAS 16 and we have IAS 40. IAS 40 is investment property. So this could be buildings, this could be land. It can't be, let's say, cars that we are going to lease out. For investment property, we are going to use fair value method. So this means that no depreciation will be charged, and instead there will be revaluation at the year end, and the difference will go to P&L, regardless whether it is upward revaluation or downward revaluation. So what does it mean? It means that the companies would really love to use this very method compared to IAS 16, which says that depreciation is charged no matter what, unless it's land, of course, and also that the revaluation will go to OCI unless it is impairment. So consider this. If we have a building and we sublet it to, let's say, our subsidiary, then in our individual financial statements, that would be IAS 40, investment property, because we get benefit from the rentals. But if we are going to prepare group accounting, then our subsidiary is a part of a group, a part of the entity that puts its debits and credits in our financial statements. So this would be deemed as owner occupied. So this means that we have to charge depreciation. We have to revalue, if we do revalue, using OCI, not P&L. Fun, right? So, to sum up, with IAS 16, we can be tested on depreciation because in SBR, we are tested on possible accounting manipulations. And since depreciation is a P&L expense, then the companies may want to decrease depreciation for the profits to look better. And when we are going to challenge the scenario, we are going to look at each and every sentence in the scenario, and we're going to draw conclusions to everything that we see. And that is just one of the IAS 16 examples. And I will see you next.